Margaret Caldwell from Stan Johnson Company. How are y'all doing?
Great.
Doing
How
great.
are you?
Good. And end of the day on Monday of the show. How has it been?
First day's been great. Super busy. I mean, it kind of felt like Vegas back in the day.
Isn't that crazy? I know I'm hearing that from a lot of people. The energy has been really, really good, I think, at the show.
Energy has been great, and we've had steady people throughout the day. So it's been great to reconnect with people after not seeing them for a couple of years, and making new friends as well.
Wonderful to hear. I want to talk to you too about multi-tenant retail, which has really been a bright spot, I would say, and I don't know if you would agree with that, in the pandemic and beyond, particularly open air centers. So what are your thoughts on that? Would you agree that it's on this upward course and trajectory?
It has been shocking what a bright spot it's been. Pre-COVID, things were slow. We weren't seeing the same number of bidders show up for deals. Things were starting to slow down. And then COVID hit, and the first year was just pretty much dead, unless it was grocery anchored.
Right.
And since then, we've seen cap rates decline to levels of 2007.
Right.
I mean, it's been quite a surprise.
Has that been like sort of on the lips of everyone you've been talking with at the show today? Like, is that something that has been coming up?
Well, it's kind of interesting because things have kind of changed a little bit. Now everybody's concerned with rates increasing. You know, how is that going to impact cap rate? And that's been the big question of the day.
What are your thoughts on that?
So with interest rates increasing, I definitely think it's going to have an impact, but primarily on the B and C quality open air assets.
Okay.
I feel like for the A properties, there's still so much capital out there, especially with institutional investors. And they're not as impacted by the debt markets because a lot of them are still buying all cash or with lower leverage.
Okay. What about you? What do you think?
You know, I think interest rates kind of go hand in hand with inflation, and we're seeing the markets adjust to both of those impacts right now. And real estate has historically been an inflationary hedge, and I think there's pent-up demand from the pandemic, and I think the combination of that pent-up demand as well as the inflationary impacts, I think there's still opportunity in multi-tenant retail.
What do you think makes a great multi-tenant retail center? I mean, is the tenant mix incredibly important, and can you elaborate sort of on what goes into that calculus?
So tenant mix is always extremely important, especially when it comes to a grocer. Investors want the top tier grocer, either the number 1 or 2, but having said that, I think they'll take about any grocer.
Really?
Right.
Yeah.
I mean, people always need to buy groceries, so that's super important. But what we saw during early on after the pandemic, a year into it, power centers became hot again, which was really interesting.
What about you?
Well, and I think, you know, even one step removed from the tenant mix is what we're seeing in terms of the shift from enclosed malls to open air centers. And just frankly, the ingenuity of retail developers to create new types of experience for consumers. So whether it be community events that draw people to an open air environment where they feel safe, or whether it's retailers that are drawing people in with new rewards programs. These are just ways that retail continues to evolve.
Would you say, and I've been hearing this, and I'm curious both of your takes on this, that there's more of a synergistic relationship between landlords and tenants now, where they're really trying to work together to figure out the best and highest uses of these spaces, because retailers are also, you know, looking toward experience, right? I mean, I think obviously during the pandemic that took a major hit, right? Because we weren't experiencing anything outside the four walls of our homes for a period there. But is that what you're seeing, sort of boots on the ground?
Well, we definitely saw that during the beginning of the pandemic where they partnered together because they were trying to get through what was going on, and the owners wanted to keep the retailers happy and to keep them in the property and thriving. And I mean, what's really happened is we are quickly unwinding challenged retailers faster than we ever thought that we would going through COVID.
Right.
And what would have happened over 5 years has really happened over maybe 6 months to a year.
Right.
Which has been great. I mean, we've really changed a lot of how we're doing our shopping.
It totally has been disrupted. And I mean, I always hesitate to use the word disrupted because I think it's overused. But I think in the case of the pandemic, so trends have accelerated that we're already sort of picking up. And then, you know, to your point, I think retailers have really been looking at their footprints and thinking, like, what is the best use of our spend, right? And where do we want to place priority? So what are you most excited about as you look toward the second half of this year and into 2023?
Well, I'm just excited that retail is hot again.
Yeah.
I mean, that's really changed. And
Yeah.
now we're seeing investors roll out of different property sectors into retail, chasing higher returns, whether it's multifamily or industrial, and now focus on retail.
How about you, Jeff?
Yeah, I think that's right. I think seeing the broad interest of both private capital and institutional capital for kind of the risk-reward profile of multi-tenant retail is exciting to see. That there's demand, frankly, across the spectrum. I think that's probably it.
So investors are chasing retail. I love it. It's great to see both of you, Jeff Cox, Margaret Caldwell, Stan Johnson Company. Have a great show.
Thank you.
Thank you.